A Home Insurance Guide. Chapter 1. A Home Insurance Guide. Homeowners Insurance Info. Homeowners policies can either be defined as basic or broad depending on what you want to insure them against. The basic ones will have provisions like fire, theft, vandalism, while the more broad ones will cover such things as burst pipes, insect pests, faulty electrical wiring, etc. If you want earthquake or flood coverage, you have to buy a separate policy or get an addition on your homeowner's policy, which is quite expensive. If you have something expensive like a computer or jewelry, you can buy extra insurance on them if you want. Homeowners policies have two types of protection: property damage to your house and its contents. Liability, which covers you if someone is injured in your home or on your property. The basic categories are: Homeowners 1. Ho1 is basic protection against things like fire, vandalism, smoke damage, lightning, civil unrest, burglary, glass breakage. It covers both the home and your personal property. Homeowners 2. Ho2 adds falling object danger, roof collapse due to ice and snow, electrical damage, frozen pipes, etc. It doesn't cost much more than Ho1. Homeowners 3. Ho3 covers almost everything except for damage due to floods, earthquake and war. This is the most commonly bought homeowners policy. Homeowners 4. Ho4 is a renter's policy, covering their personal property and liability. Homeowners 5. Ho5 is a condominium owner's policy. It covers personal property, liability, and the value of improvements you make on the building. Homeowners 6. Ho6 is a limited policy for valuable and unique, older homes offering restricted coverage. The cost of a policy is figured out by a formula including the value of the home and the crime statistics in the neighborhood, among other things. Most homeowners policies have limits as to the value of what they will cover. For example, 70% of the value of personal property, $100 limit for money, coins and silver, $500 for jewelry and furs, $500 for silverware, etc. You're generally covered only for current market value, not replacement value, but you can specifically buy a replacement value policy. Most mortgage lenders require that you have homeowners insurance, but it's your choice to shop around and find the cheapest deal. Most homeowner policies will not pay for damage due to act of God, floods, earthquakes, volcano, etc. Nuclear meltdown, vandalism or freezing if the house has been vacant for several weeks. No pet coverage. Liability is void if the injury is intentional. Liability of tenants. Liability for business activities. Widespread power failure. Water damage. Normal wear and tear of property. Property belonging to a roommate. Only your property is covered. Stupid actions like getting drunk and throwing up on your new carpet. Ask about any special provisions if you rent your house out or let your friends stay there. If you're remodeling your home, tell your insurance company about it. The Fair Access to Insurance Requirements Law, FAIR, requires that insurance companies can't discriminate and not offer homeowners insurance to minority and ghetto neighborhoods. This is the law in 31 states. Homeowners policies usually cover you up to $500 for stolen credit card purchases. There's business interruption insurance if something happens that you can't conduct business. You can get this for home-based businesses. If you own expensive personal property like jewelry and valuables, ask for an additional personal articles floater policy to cover that property. If you use a contractor, ask to see his insurance before he does work on your house, otherwise you could be liable to injuries to his workers. If you have stuff in a safety deposit box, get it insured on your homeowner's plan. Renters can buy policies that are somewhat similar to homeowners policies to cover their personal property. Once you get 20% equity in your home, ask your mortgage company if you can drop the private mortgage insurance if you have it. Insure.com. insweb.com/home-insurance/home-insurance.html. American Insurance Association. 1130 Connecticut Avenue. NW. Number 1000. Washington, D.C. 20036. 202-828-7100. Fax, 202-293-1219. AIADC.org. Free publications about taking care of your home. Homeowners' claims. When filing a claim, write everything down on paper and contact the insurance company. Your best bet is to do preventive work before you even have to file a claim. Videotape all your possessions and or write up a complete inventory of anything that has any value from your clock radio to your computer and date it somehow, like getting a notary public, lawyer, several witnesses to sign so the insurance company doesn't think it's a phony list of personal property you made up after the fact. Try to get all receipts together and even bring it all to your insurance company and ask them to sign and date it when getting your policy. Keep all receipts and maybe bring an appraiser in to get it all tabulated. Make sure you have a copy of the policy. A cancelled check isn't good enough. Keep a spare copy somewhere other than your house in case it burns down. The insurance company will send an adjuster over who will file your claim. He may appraise the damage himself or get a professional appraiser to do it. If you don't agree with their offer, you could get a contractor or even a professional adjuster to make an estimate of the damages. If you make temporary maintenance repairs such as boarding up windows to keep looters out, keep all receipts to show the insurance company. Don't make permanent repairs until you have settled with the company. If the damage is so extensive that you can't live at home, notify the insurance company and keep all receipts of hotel bills and other accommodations like meals. The company will pay up to the amount agreed upon in the policy for this situation. National Association of Independent Insurance Adjusters. 300 Water St. Baltimore, Maryland 21202. 410-539-4141. 312-853-0808, Chicago. NIIA.com. If you disagree with the insurance company's claim, you might want to hire an independent adjuster to assess the claim on your behalf. Contact the above organization for a list of referrals. Read the agreement over before you sign the claim. Read your policy about the resolution of disagreements, as many policies stipulate for a resolution by a 3-person arbitration board, someone picked by you, someone picked by the insurance company, and a neutral third party, usually from the state insurance office. If you still can't agree on a settlement, go to your state insurance office for help. Many insurance companies refuse to pay out lawful claims or offer a sum far lower than your actual loss, and most people don't do anything about it, which is a shame because there are powerful laws to protect consumers. An honest claim lays the foundation for further action should your company refuse to settle. Request a written explanation as to why your claim was denied. An explanation is required by law in most states. If they cite some trivial technicality, you can usually fight it successfully. Many courts will see through the ambiguous fine print of a policy and rule for the policy holder. Be honest with your claim and don't overinflate it. Your agent could be an innocent pawn in the game and may go to bat for you. If the local office doesn't give you satisfaction, write to the national office and threaten litigation. If that doesn't work, go to your state insurance office. They might help but may be too understaffed to do much. Your next step is to see a lawyer and take them to court. A lawyer will probably take your case on a contingency basis, and most likely it will be settled out of court because insurance companies don't want bad publicity. If you receive a settlement for stolen property and the police recover it at a later date, the insurance company now legally owns it. It's your obligation to tell them, and they usually give you the option of buying it back. In some cases, your personal property is covered even if you're not at home. For example, if you're out camping and your tent burns down, you can claim that as part of your household property. Some car break-ins are covered. Your college student child's goods could be covered in your policy. Insurance companies have a formula for which they calculate depreciation into everything covered. When recovering for personal property, you will often find that you don't get the actual value when purchased but rather, the depreciated value. Keep an inventory of your belongings and possibly videotape all your house's contents and keep the tape in a safe place at another location in case of fire. If someone is injured on your property or by a member of your household, or if you damage someone else's property, there may be a claim filed against you. You will receive papers in the mail notifying you of this. Make copies and notify your insurance company. It's your responsibility to get any medical bills and papers involved and give them to your insurance company. Although insurance companies vary with the way they resolve disputed claims, most send out investigators who talk to the parties and try to reach an objective version of what really happened, then proceed from there. They may make you sign a sworn statement, and the claim may even end up in court if the insurance company refuses to pay because they believe it to be unfounded. The replacement value scam. If you buy homeowners insurance for the replacement value of your home, don't let them give you a vague term for coverage like full replacement value or extended replacement value. If you get these kinds of policies and your house burns down or gets destroyed somehow, the insurance company will offer you under 60% of the replacement value cost estimate. This is a matter of policy for them, to rip off their policy holders. If you decide to fight it in court and sue them civilly, their lawyers will stall the case with all kinds of techniques like asking for trivial paperwork, setting up appointments with experts in the field like the cost estimator, canceling it and rescheduling it. They will do this to get the policy holder tired enough to settle. They don't care if lawyer fees cost more than what they save by not caving into the policy holder's demands for fair treatment. The point is to send a message to all homeowner policy holders that if their houses get destroyed, they had better accept what the insurance company offers, because if they don't, they will either lose in court or be tied up for 5 years or more. The only solution is, when buying your policy, get an exact dollar amount written into it as to what your home is insured for should it be destroyed. How to save on home insurance. Insurance is a very competitive business, and the price you pay for your homeowner's insurance can vary by hundreds of dollars depending on the insurance company you buy your policy from. Companies offer several types of discounts, but they don't offer the same discount or the same amount of discount in all areas. That's why you should ask your agent or company representative about any discounts available to you. You can save money when buying a policy if the house is new, if you're 55 or older, or if you have certain preventive measures like installing alarm and fire safety apparatus. Lifestyle meaning non-smoker, and if you're retired or work at home, the presumption being that if you're home, you can stop fire damage or burglary, the highest reasons for claims. Identification numbers on your property like VCRs, TV, etc. Burglar alarm. Deadbolt locks. Guard dog. Bars on windows. Solid doors. Fire department inspection. Window locks. No smoker in house. Sprinkler system. Smoke detectors. Fire extinguishers. Check your policy carefully to see that they're not charging insurance for things like land, the foundation, underground pipes, etc. These things can't be destroyed, so why insure them? Pay the bill in full up front rather than higher monthly payments. Be sure to shop around. It will take a few phone calls, but they could save you a good sum of money. Ask your friends, check the yellow pages, or call your state insurance department. Also check consumer guides, insurance agents and companies. This will give you an idea of price ranges and tell you which companies or agents have the lowest prices, but don't consider price alone. The insurer you select should offer both a fair price and excellent service. Quality service may cost a bit more, but it provides added conveniences, so talk to a number of insurers to get a feeling for the type of service they give. Ask them what kind of break they can give you to lower your costs. Check the financial ratings of the companies, too. Then when you have narrowed the field to 3 insurers, get price quotes. Raise your deductible. Deductibles are the amount of money you have to pay toward a loss before your insurance company starts to pay according to the terms of your policy. Deductibles on homeowners' policies typically start at $250. By increasing your deductible to $500, you could save up to 12%, $1,000, up to 24%, $2,500, up to 30%, and $5,000, up to 37%, depending, of course, on your insurance company. Buy your home and auto policies from the same insurer. Some companies that sell homeowners, auto, and liability coverage will take 5 to 15% off your premium if you buy 2 or more policies from them. When you buy a home, consider how much insuring it will cost. Because a new home's electrical, heating and plumbing systems and overall structure are likely to be in better shape than those of an older house, insurers may offer you a discount of 8 to 15% if your house is new. Check its construction, too. Brick, because of its resistance to wind damage, is better in the east. Frame, because of its resistance to earthquake damage, better in the west. Choosing wisely could cut your premium by 5 to 15%. Does your town have full-time or volunteer fire service, and is your house close to a hydrant or fire station? The closer your house is to firefighters and their equipment, the lower your premium will be. Insure your house, not the land. The land under your house isn't at risk from theft, windstorm, fire, and the other perils covered in your homeowner's policy, so don't include its value in deciding how much homeowner's insurance to buy. If you do, you will pay a higher premium than you should. Beef up your home security. You can usually get discounts of at least 5% for a smoke detector, burglar alarm, or deadbolt locks. Some companies offer to cut your premium by as much as 15 or 20% if you install a sophisticated sprinkler system and a fire and burglar alarm that rings at the police station or other monitoring facility. These systems aren't cheap, and not every system qualifies for the discount. Before you buy such a system, find out what kind your insurer recommends and how much the device would cost and how much you'd save on premiums. Stop smoking. Smoking accounts for more than 23,000 residential fires a year. That's why some insurers offer to reduce premiums if all the residents in a house don't smoke. Retired people stay at home more and spot fires sooner than working people. Retired people have more time for maintaining their homes, too. If you're at least 55 years old and retired, you may qualify for a discount of up to 10% at some companies. See if you can get group coverage. Alumni and business associations often work out an insurance package with an insurance company, which includes a discount for association members. Ask your association's director if an insurer is offering a discount on homeowners insurance to you and your fellow graduates or colleagues. If the insurance company is honorable, stay loyal to them. If you have kept your coverage with a company for several years, you may receive special consideration. Some insurers will reduce their premiums by 5% if you stay with them for 3 to 5 years and by 10% if you remain a policy holder for 6 years or more. Compare the limits in your policy and the value of your possessions at least once a year. You want your policy to cover any major purchases or additions to your home, but you don't want to spend money for coverage you don't need. If your 5-year-old fur coat is no longer worth the $20,000 you paid for it, you will want to reduce your floater and pocket the difference. If you live in a high-risk area, say, one that is especially vulnerable to coastal storms, fires or crime, and have been buying your homeowner's insurance through a government plan, you should check with an insurance agent or company representative. You may find that there are steps you can take that would allow you to buy insurance at a lower price in the private market. If you spend a lot of time at home, like if that's where you work or are on disability payments, tell the company. They might lower premiums. A basic homeowner's policy is usually enough since most claims are small. The amount you pay for extra coverage is usually not worth it. Ask for the minimal coverage and don't get any fancy options like removal of debris, fire department surcharge, insurance on the trees, etc. Home inventory software. AccurateID.com, BlueOcean.com/HDDemo, iCollect.net, info-star.com, mrtec.com. Business insurance. benefitmall.com/index.asp, federatedinsurance.com, mostly business insurance. insurancenoodle.com, business insurance. nationwide.com, wausau.com, Business Insurance. Womeninc.org, 800-930-3993. Business Insurance. 740 North Rush St. Chicago, Illinois 60611. 800-992-9970. Weekly Magazine. Home Office Business Insurance. These companies offer small business, home office, and possibly computer insurance for both the hardware and software. InsuranceNoodle.com, Business Insurance. NACE.com, 800-232-6273, National Association for the Self-Employed. SBSB.com, 800-343-0939, Small Business Service Area. SSAinfo.com, 800-836-4SSA, Support Services Alliance. WorkingToday.org. American States/Safeco. 205-545-5000. Safeco.com. Cigna.com. 215-761-1000. Fireman's Fund. 415-899-2000. The-fund.com. Crime and Disaster Insurance. The federal government has a crime insurance program and disaster insurance programs. Homeowner policies do not cover earthquakes. You must either buy a separate policy or get a rider on your homeowner policy. The deductibles are usually quite high in earthquake-prone states like California. Federal Crime Insurance Hotline. 800-523-2929. Buy crime insurance from the government. Federal Insurance Administration. Federal Management Agency, FEMA. 500C St. SW. Washington, D.C. 20472. 800-638-8780. FEMA.gov. Information about low-cost crime insurance. Urban Property Insurance. Federal Insurance Administration. HUD. Washington, D.C. 20410. HUD.gov. They offer insurance against riots, civil disorder, vandalism, etc.